Well, here we are, folks. Another Tuesday evening. Thanks very much for spending some time with us again this evening. And just to explain that the clock's changed, I'm now 11 hours behind, so it's quite early here in the UK, but that's fine. I actually was up for a 7 a.m. recording with Senator Rennick this morning, which will be up tomorrow. So getting his thoughts on a whole range of things. So it's quite actually useful to be up early, and it's all going quite well. Just put the pre-show on for a second or two, and I've got Tony teed up, ready to come in a second, and we'll have a good conversation this evening. Just to say that if you've got specific questions you'd like to ask, don't forget to put them in the chat. It's the best way to steer the show in your direction, as it were. And there's always time, of course, to tease out some of the discussion points. So just bear that in mind. My throat's a lot better. Those of you who've been following me over the last 2 or 3 days will know I had a bit of a thing. It sounds a lot worse than it actually is, but I had a bit of a sore throat, but it's a lot better now. I sound like a little horse, indeed, Nick. Yes, I do. Just a little horse, but the other day I could hardly speak at all, so that was a bit of a problem. Anyway, that's enough of me. But of course, before we finish the pre-show, we should just revisit the dogs. They're looking extremely comfortable in their beds, having had a walk this morning as well, so I've been quite busy, really. And they're now hopefully going to stay asleep and quiet for the show. Who knows? Sometimes they do wake up and make a bit of noise. But anyway, that's part of the process, really. Right, pre-show off. I'm going to run the show proper, and I'll be back in just a moment. Well, good evening and welcome to this live stream on the 31st of October 2023, Halloween for those who care. It's Martin North here from Digital Finance Analytics. Great to have you on tonight, and it's an important conversation this evening. Tony Locantro will join me in a moment, just to remind you, as we always do, that we don't provide specific financial or legal advice. It's really important that you understand this is a general conversation only. And that's just, the way it is. We're not trying to get into individual recommendations or individual positions for individual people. Do play nice in the chat, please. So no racial slurs. We moderate the chat, of course. This is as at the 31st of October 2023, if you're watching in replay. If you'd like to ask a question or get my attention, if you use @alltheworld, that then puts it into my stream, and that means that I get to see it. And if you have a question, throw it in the chat. Always time to explore questions from the followers and studio audience, as it were. So feel free to throw those questions in. I've also enabled Super Chat, which means that if you'd like to get your question top of the list, you can do that, or indeed make a contribution to what we do here. Always appreciated. We do this not for profit, but because we think it's a really important conversation to have, particularly at the current point in time. So without further ado, let me bring Tony in. Tony, hello there.
Oh, g'day, Martin. It's actually funny about you losing your voice for a little bit. We just got back from Japan, and I managed to lose my voice. And Juliana said, please don't talk for a few days. And it was the most tranquil 3 days of my life.
Yeah.
So, but anyway, it's hard for especially a stockbroker to lose their voice, because that's pretty much the asset I work with. But probably caught it on the flight home from Japan, but happy to provide some insights of what I discovered over there. But generally, it's Halloween. I have 3 initials for that, ZFG. Work that out yourselves. And I've actually just taken the batteries out of my doorbell, so none of these little sugar-addicted gremlins come knocking during the show.
Yeah, very good. Yeah, it is a bit like that, isn't it? And we should talk about Japan, because, of course, Japan has gone through a long, slow grind over a long period of time. You know, they had this massive real estate boom way back, and then they had a bit of a sort of a slowdown. And now, of course, interest rates in Japan are looking as though they could be notching above 1% for the first time for a long, long time. So Japan is an interesting case study. And, you know, there is a lot of people who believe that the broader economy, particularly Australia, could actually be following Japan and become, you know, a Japan-type economy, which is superficially okay, but when you strip below the surface economically, maybe not as much growth as you might expect. So it'd be worth exploring that. I owe you an apology, Tony. I think also in terms of the thumbnail for this show tonight, I grabbed it off the video that I did with you. That must have been about May or June. Gee, you've definitely slimmed down a lot since then.
Yeah, happy to share the secrets if anyone believes me or wants to listen. But yeah, no, that was 17 kilos ago, and a prescription of glasses. So yeah, it's all right to see my bigger shots. I wouldn't say it was a fat shot, but yeah, certainly a lot heavier in those days. But at some point, happy to run through what I'm doing, a little bit about my research and why I'm never going back to these terrible foods and addictions.
Yeah, it is interesting, isn't it? How sometimes, you know, an event or a situation or something changes, and you just make a decision. I mean, I went through a somewhat similar process, probably about, I was mid to late 40s. I'd been working very hard and wasn't getting a lot of exercise, and I was having a lot of business lunches and things. And I suddenly looked at myself one day and thought, oh, hang on a moment, I seem to be a bit sort of broader and heavier and sort of slower than I'd been used to. I used to run a lot of marathons when I was young. And I sort of got on the scales and, oh, goodness me. And it was like a sort of a moment, you know, it was like no, I need to do something, right? And having had that point of saying, no, I'm going to do something, I never actually looked back. But sometimes you do need a bit of a sort of a trigger point, something to actually, stand back and think, no, I need to do something. What was the point for you that I need to do something?
New Year's Eve last year, I was drinking this low-calorie champagne, and I thought, what the hell am I doing? To get in the police, I was fit as all buggery, went through the police academy, and then suddenly you get out of the academy. I'm working at Bondi and everyone's delivering fast food for free. So I then, obviously it was unhealthy lifestyle, but I just thought New Year's Eve last year, I'm going to have a year off alcohol. So I've done that, started lifting weights, which is good. I was actually at a plateau. So I was going to the gym 5 days a week and my weight and fitness wasn't moving. So then I did a shit ton of research on carnivore, and here I am now. So Eddie's worked tremendously well. My partner jokes, you've lost half your weight and half your net wealth. So anyway, that's a revolving joke in my house. But yeah, I'm happy to get into it a little bit later. And I've certainly got some insights on it. But I'm not a conspiracy theorist, Martin, but all the bullshit in the food and medical industry, I don't want to bore anyone. My kids are sick of their life lectures I give them, but God, you're no good if you're not healthy and you're not here. So anyway, I've had 2 years of the worst grinding sandpaper to death bear market of my 25-year career. I get the friggin' joke now, but at least I'm here, I'm fighting, I'm fit, I'm mentally alert, and mental clarity is what you need. And sadly, I can only imagine what families are going through now and how they have to stay on top of their finances when they've been coasting on cheap money for so long. And you just got to feel sorry for what's coming to this country. And heaven help us if we turn Japanese, Martin. Heaven.
Absolutely. Well, I called this show the Coming Storm. And the reason I did that was because we've been talking about the evolution of household finances and the evolution of markets for a good number of years now. We've been doing these shows for quite some time. And we always said it can't continue, right? And you and I both said, just remember, folks, long-term interest rates are, 6, 7, 8% for mortgages, and In that context, this is the 10-year Aussie bond, right? Knocking on 5%. Now, I don't know about you, Tony, but I was not totally surprised to see that because of what's been happening internationally. But the consequences of this sort of movement in rates is profound. And to my mind, this is part of the story. Now, whether it's a cause or whether it's actually a consequence is something that's worth kicking around. But, the numbers don't lie, do they?
No, and that's an ugly set of numbers. And the basics of the bond market is those that have been in the bond, when interest rates rise, expectations of higher returns and bond prices fall. So the bond market has been absolutely spanked on the backside. You look at these major issues, and now there's probably going to come a point where if we're higher for longer, I think you're going to see, and the economic risks start to increase, and they're saying that we're going to weaken off. I think with the level of returns, I think you might see a bit of a rush back to the bond market. And there's lots of ways now retail investors can get set in that through these ETFs. So I think if you're looking at that side of the market with low risk, decent upside, and equities remain overvalued, I think we could see a little bit of a shift there. But those figures are frightening. I've been talking to some people that have been on 1.88% fixed mortgages,
Yep.
and they've now straight on to rates just below 6%. 30-year fixed loans in the US, who would have thought they'd get to 8%? 8% for a 30-year fixed loan, that's just unheard of. And again, then their market is probably half the price of ours. Their wages are a lot lower as well. And you just got to be concerned about what's happening. I saw some laughable quotes. Bloody retail sales up 0.9. The anticipation was 0.3, and they blamed the bloody new iPhone. So you got to look at millennials. I mean, so what? iPhone titanium. That was blamed for these strengthening retail sales. There's a fair chance they're going to hike, whilst everyone's had a skinful trying to win money on a horse race. So and it's not going to get any better. And you can't, how the hell are people going to go out and get additional income when they've opened up the immigration floodgates to people on student visas? They've taken all the shitty jobs no Australians want to do, and they'll work multiple jobs. They'll barely sleep to live the dream of living in this wonderful country. And let's face it, we live in one of the best countries in the world. And unfortunately, our shitstorm, we're right in the eye of it now, and it's only going to get worse because there's zero levers that the RBA can pull because you've got inflation expectations are high. We are addicted to spending, and it's no relief. I mean, all we had to do was put away our debit cards, credit cards, but no, we're on this binge and we're going to pay for it. And all the bullshit around low interest rates forever. Interest rates are never going to go up in our generation. What a crock. How can we go by those lies when we've reiterated, Martin, the long-term RBA rate is 6.5%. The long-term mortgage rate is over 9%. So put that into your flux capacitor and see where we end up. So, well, that's it. That's the law. And I know we haven't seen economic hard times since the last recession. Maybe there's been some blips. We dodged the GFC when they handed out gift vouchers for JB Hi-Fi. People, we live well above our means. People got to realise is consumerism, you get this dopamine hit. It's like porn, cocaine and sugar. And then you end up with useless shit you can't sell on Gumtree. And we're going to pay for it. All these buy now, pay later. You see people in, Target, Kmart during Christmas. I got a total gift ban on Christmas. I'm over it. Why should we go into debt? Why should we struggle to impress other people? But look, in the end, I'm hopeful that we replicate what happened in Ireland and certainly not in Japan.
Yeah, absolutely. Well, we'll see how it plays out. Cookie Boy made this post a little while ago, which I just want to bring up, which was we all think of Roger, who unfortunately died, well over a year plus now. But he was another calling this out, right? And he and I recorded a couple of shows. Go back and watch them. They are actually available still on my channel. And he said that rates are going to go higher and they're going to stay higher. Inflation is going to stay high. But he also warned, as Cookie said, about the second round of inflation. And I think the point is that this inflation battle is not over. And, whilst the politicians in Australia and elsewhere around the world are actually trying to, jawbone the RBA into not lifting rates and trying to sort of explain why inflation isn't as bad as it really looks. When you look at the last inflation numbers, if you take out all the government support that have been thrown in the last quarter, the inflation would have been a lot higher, whether you look at power or fuel or whatever it was. We haven't got the inflation thing under control. The services sector, the wages are rising quite fast. We've got fresh issues with regard to oil because of the international situation there. But the underlying story here is higher for longer. And the higher for longer story means that we can't expect to see interest rates come down over the next year or so, or two maybe. And it's runway that I worry about, Tony. If rates go up a little way or a significant way for a short period of time and come back down, you can survive. But when the taps keep getting turned and turned and turned, and then they're held there in that new tense position, it makes it very, very difficult for people to know what to do. And particularly in the situation where if you're a homeowner and you've got a big mortgage, and the only other option is to try and rent, and with rentals at 1.1% vacancies at the moment, that's ridiculously low, relative to history. And when you've actually got the situation where if you don't have somewhere to live, then everything else falls apart, you're going to do absolutely everything you can to try and keep paying those mortgages. And I also think it's very interesting that the ABA and the banks have started advertising. Did you see the adverts over the last couple of days saying, if you're in difficulty with mortgage stress, come and talk to us. And what are the tricks they're using? Extending the term of the loan, going interest only, taking a defer of repayments for a period of time. All of those things, that actually all benefits the banks because they just get more interest for longer. So you can see how critically many people are now precariously balanced between trying to keep everything going or not. Now, you and I were talking about this 2 or 3 years ago, and we were both saying, prepare for this, prepare for this. I guess the question I've got is, for those people now caught in the headlights, as it were, what can they do? It seems to me there's almost no way out.
Well, the first thing you can do is sell. There's no shame in that. But the problem, families, and particularly husbands, it's going to be a pride issue. And if the husband's a major breadwinner, the one that brings in the major salary, they are going to feel embarrassed that things aren't going that well. I've mentioned numerous times it only takes a few house sales in a street to see the price drop 20%. There's still idiots buying houses near a meth lab with a chance of a drive-by shooting. So you never know. You've got to try your luck. And I mentioned at the top of the East Victoria Park bubble in Perth, 2014, the prices were going nuts. We had a beautiful home we couldn't afford because we spent too much on it. And at the home open, it was crickets. But I think the best thing you can do is put it on the market. And the sad part is that once you take into consideration the true costs of owning a home, the true costs of stamp duty and other fees, many families are going to be below break even. So what do? Do you take the hit now? Do you take the capital loss? Or do you fight? But I just think that it's just going to drain the energy out of the couple. And then you start getting other issues coming up. So I guess at some point, when do you capitulate? And it's the same with stocks. You can hang on, and then suddenly there's capitulation. The time to sell all your chest freezers and treadmills on Gumtree has long passed. The used car index, you've missed your window there. Tarek produced that chart. You could have sold many new cars at a profit. These opportunities are gone. You can quit all your streaming services or stream rotate, but that's just like throwing feathers into a cyclone. How else can you cut out costs when you have to eat as well? They say meat prices should be falling. Well, the supermarkets aren't passing it on. So it's worse than being sandpapered to death, because I can assure people that there's no worse stress than initially financial, and that heads into domestic violence. It heads into putting off medical, dental. People will walk around with toothaches now because they can't afford to go to the dentist. People will start pulling their kids out of private schools, and suddenly we realise that we'll sold a massive lie. So, unfortunately, unless you can jag someone who wants to live in a aspirational area near, as I said, some of those features, or you can jag a money launderer. So I think that's your best bet, because these money laundering operations, you never know, you might find a buyer. But, the thing is, Martin, that all these dressed up houses with the brown brick facades in these East Dubbo area, East Broken Hill, they all look the same. And eventually no one will give an absolute iota about having an ocean glimpse or close to a park or close to a school, because last time I looked, every bloody school is a high-quality school and people aspire to get in there. So the answer to that question, even though my answer was long-winded, is no. Where a lot of people, unfortunately, are completely fucked. And they're going to have to wait. They're going to have to wait for their parents to die, unfortunately, because that's their only escape. If they can hold off during that probate period, I know this sounds macabre and not nice, but people are going to do anything to save themselves, and it's going to be every family for themselves.
Yeah, I know, it is tough. I mean, again, I've said this a few times, it amazes me that quite a few people still, who are in, some degree of difficulty, don't understand just how much difficulty they're in, because they don't necessarily have the knowledge about their finances to understand what money's coming in, what money's going out, and where is it going. And, I through my surveys, analyse this in some detail, and it is still quite frightening how people are prioritising what money they've got into things that, well, do you really need all of those streaming services? Do you really need all of those mobile phone plans with unlimited this and unlimited that? It's sort of trying to turn the ship around a bit. One of the interesting observations, in fact, Edwin mentioned this yesterday, was, people are not going out as much to eat out as much. What they're doing is actually eating at home and cooking their own stuff, which may actually be a lot better thinking about it from our earlier conversation. But there are some lifestyle changes that are implied by that, right? In terms of, hunkering down on those sorts of things. I guess the other point I keep coming back to is this. The rise in personal credit is one that's actually, the data that came out today showed that personal credit was up again. And in my surveys, I'm seeing quite a concentration amongst those who have big debts and mortgage stress or big rental problems. They're just grabbing more credit. So there's still this idea that if I can hang on, if I can grab a bit more credit from here, there, and everywhere, buy now, pay later, or other forms of credit, I can get by. But and I know that that's okay for a short term, but it's not a fix, is it?
Oh, absolutely not. And it is desperation. Are more people going to start turning to gambling, which is another dreaded addiction? You'll see certain lotteries, people will start playing more. They'll try and gamble their way out, or as surveys have shown, 5 to 10% will go out and commit petty theft to survive. And I'll go back to Japan. What I did notice about the people there, they are respectful. You leave your bike on the street. No one's got anything locked. There's zero tolerance, not much tolerance for crime. There's no graffiti. You never feel unsafe. One of the extravagances was I took my sons to a Post Malone concert in Tokyo, the most well-behaved crowd you'll ever see. And they've had over 30 years of being in economic shit, yet the people are still respectful. I cannot see that happening in Australia at all. I just think that the respect levels are low. Everywhere's covered in graffiti. People don't mind just stealing, robbing people, break and enters, all of that. And I think a lot of those beautiful enclaves out west, that orange Mudgee area or slightly east of it, are just going to turn into ghettos. And you'll start noticing it when people don't care for their gardens or they don't wash their cars, because, you look at these beautiful SUVs and to get them detailed, you're up for about $300. And, looking at cost cutting, every time I drive past a Muzbuzz and there's a massive queue, I cringe. I mean, for us, that was one of the first things to go. These days, when I go out, I only order steak and salt, so I don't need to go to a restaurant. Actually, it was funny. I found it quite hard in Japan because everything's tempura this, tempura that. I didn't understand what was what. So I made friends with the local McDonald's who sold me beef patties with cheese and beautiful Wagyu, mind you. But do we really need to go out and pay $50 for an average steak? And what I've noticed is not drinking has made me not spend as much going out. Do you really need to sink 2 bottles of wine? And then you spend probably $50 plus on Ubers. So, yes, we're going to stop spending. That's going to affect all these people that went out on low interest and thought, hey, I can copy what these people have done, set up a successful restaurant. And unfortunately, it snowballs, because once we stop spending, they haven't got the revenue, they haven't got the rents, and you're going to see a lot of restaurants now leased out with full kitchens. I mean, and they're going to desert them. So we are certainly going to stop spending, and those struggling are probably going to go on to the lower quality mints, which, funny enough, is actually better for you.
Yeah, it is interesting. It goes back perhaps to the Western values that underpin, what's happened over the last, 2 decades. And I was reading a survey the other day. Kids in various countries were asked about what they aspired to be when they grew up. And I thought it was a really interesting contrast. The number one in the US, occupation was actually YouTube content creator for people in the US. In China, the number one aspiration was to be an astronaut. And I thought that was a really interesting contrast.
Oh, amazing. Or you could just be a 5-year-old kid who opens up toys and be worth gazillions. So I just don't get any of that. There's, this TikTok generation, there's just not much talent. And all it's done is, the world isn't that remarkable. And all we're seeing is all these garbage that tries to make it seem like a wonderful, remarkable world when in fact it isn't. But, oh God, what do you aspire to these days for kids? You've got AI, you've got trying to take over. Where do they go? Obviously, I think there's going to be demand for probably one of the highest growth areas, sadly, is going to be psychologists and psychiatrists dealing with mental health, which unfortunately is going to go exponential in numbers. Yeah,
well, I think some of the consequences, and in fact, Cookie Boy earlier on mentioned the point that you made previously about the rate of crime is likely to increase, and that means insurance premiums are going to go up. We've seen insurance premiums go through the roof in a number of areas around the world, not just in Australia, but in the UK too, and elsewhere too. And that's because, of course, if you can't survive by legal means, then you break the rules, don't you?
Yeah, and you've got to feel sorry for the people in Lismore trying to get insurance. Well, if you can get insurance, you're up for 40, 50 grand a year, for Christ's sake. And I know my premiums have skyrocketed. I live in a reasonably good suburb in Perth, and then that's just adding to it. And again, but these days the risk reward of committing insurance fraud, the odds aren't in your favour, but people are certainly going to do it.
No, absolutely. We just come back to Japan a bit, because there's one interesting observation. This is the Japan USD, right, which is now at 150, which is as high as it's been. And the central bank governor in Japan previously said that if it got too high, they would actually intervene. So we are now starting to see the prospect of higher interest rates in Japan. And when you were there, did you notice much in the way of sensitivity to rates, or were people just so used to low rates that it really wasn't an issue?
I didn't notice any of that. All I noticed was that they're absolute masters of scrolling their phones while standing like in a tin of sardines on a train. Unbelievable. I didn't see huge amounts of consumerism there at all. What I did notice was the rail network. You go to Wynyard railway station these days and you look at the expenditure on infrastructure in Australia compared to there. I mean, their subway is antiquated, it's old, a lot of it is in dire need of repair. Traffic wise, not a lot of traffic for such a big city. Everyone was pretty respectful on the roads. We did do a day trip out to Kamakura, which is a beachside suburb with lovely grey sand. Not the best beach. Australian beaches are much better. And these equivalent were still $1 million to live in small units. So the dream of a beachside enclave is still quite high, Martin, but unbelievably expensive. But again, I went to a lot of the supermarkets where food is actually reasonable value there. And if I had a fry pan, I could live like a king. But no, I didn't really notice anything. I did, as I said, had a bit of a look at property prices, but no, nothing really major there. And I can see that what they've been through, their ginormous bubble, which they, as a race, they thought they were immune to speculation, that it wouldn't happen to them. And guess what? The market was rigged by the government. The stock market was rigged by housewives. I think there was one woman that controlled a lot of it. And these large broking firms were offered incentives to sell shit stocks to people. And when you've got a stock market trading at 80 times and you've got All Nippon Airways trading at 1,400 times PE, the Palace was worth more than the entire area of Manhattan. That's a ginormous bubble. And to have 3 lost decades where you can sense in that city a lot hasn't been invested, and people to your face are still nice to you. So I think they've done exceptionally well where they're at. And then you read stories about not only the demographic cliff, which is the next nightmare coming, but there's not going to be enough people to wipe out backsides in nursing homes. And then suddenly the elderly are committing petty theft to go into prison to get looked after and to have friends. So, we certainly don't want that here.
No. Interestingly, I used to work for a Japanese firm, Fujitsu actually, and so I had quite a lot to do with the Japanese culture and the way that they thought about things. And I was doing a lot to talk about interest rates and how it actually impacted households, and it was like not the same there. And that's because, of course, they've had low rates for so long, and you say it's manipulated. It's it's all because of the way heavily, it's the structure of their financial system. And it is interesting that the new governor is now talking about now maybe having to take rates a little higher, but still way low relative to the rest of the world. Now let's just switch across to the US, because of course the Dow is now back down to sort of levels that we saw at the start of the year. So it's almost like this year hasn't happened in terms of any major impact. But the technical index, the the NASDAQ, is still up high, but it's up high because of these 7 stocks, the AI stocks. What's your take on the sort of the latest? We saw Tesla drop back dramatically. We saw Nvidia come back, still strong, but less strong. But it still looks to me as though the AI wave is still there and that people are still believing in it. Are they over egging the cake, do you think?
Well, I went to a Better Shares lunch in Perth. Now, Better Shares run a lot of ETFs. And he put up an interesting chart where the Magnificent Seven has dominated most of the S&P 500 rally. And the rest of the S&P 500, I should reiterate, there's actually 503 shares in the S&P 500 because there's a couple of other classes. But if you look at that Magnificent Seven, the rest of the market has done diddly squat. And what's happening since July, the Magnificent Seven aren't really participating in the rally now. So those that have bet against the S&P 500 should feel somewhat robbed that the returns have been skewed for 7 stocks. And you've got to look at the state of the economy over there. Now, if these 7 continue to underperform, then there's going to be some index pressure. So I don't see any real momentum in US markets, S&P, NASDAQ or Dow. These BBUS got down into the 7s. They're now in the 9s. I just thought that was amazing value. When you look at the actual breakup of the market and what's driving it. And now, if we have a look at Australia, we're seeing Gemma Acton, who's a great finance reporter, putting up charts saying the S&P ASX 200 has done bugger all for 16 years because it was at levels just prior to the GFC. But obviously that doesn't take into account dividends and the shitty companies that have entered and exited that index. So I'm not an index hugger. I know the press love to focus on people are concerned about this. They're worried about Israel. They're worried about fuel prices. I mean, that's just headlines. But in the case of the US market, we're now at the point where it probably will taper off, and those that have rightfully bet against the US economy will start to see some returns. But it just goes to show you that things can certainly go against you on the markets.
So do you think it's time for some decent stock picking? So, there were a lot of people over the last 2 or 3 years that there's no point in picking stocks because the index will actually, is driving higher. And so they basically have these ETFs that were actually aligned to the index plus or minus. I was reading something the other day that, was saying, no. Actually, now maybe the time is to really understand that not all stocks are the same. Using the example of the the Magnificent Seven and everyone else, you actually got to do the fundamentals and begin to understand that there are some businesses that are intrinsically better than other businesses, and some businesses that have revenue streams that are more secure even in an uncertain world relative to others. So is stock picking back in town?
Oh, most definitely. But I guess while you've still got access to these ETFs, I know that you're going to have ETFs now you can buy. I know Better Shares, I think, have launched a service where you don't pay any brokerage to buy an ETF. They're pushed. I guess you can average down and up on an index ETF, but who really has the time to go out and do all this research when people can't wait for the microwave to finish? They can't wait a minute, or they're addicted to scrolling TikTok and YouTube shorts the whole time. So I just think long-term investing, the interest in that is exceptionally low. We've had a generation addicted to trading crypto, and the Bored Ape Yacht Club. Remember that, guys? I mean, where the hell's that gone now? So yes, and I there's a book called 100 Baggers by Chris Mayer, which I highly recommend. And I think one of the quickest stocks to 100 bag in the US was Monster Energy drinks. So it can be done, or Southwest Airlines. So sometimes traditional, boring businesses can outperform. But if you look at some of the stocks in Australia, the banks have done diddly squat. They've corrected. Commonwealth Bank likes to hover around $100. They're actually starting to lose mortgage share. So I think there's scope there to do research. I'm obviously heavily focused on highly speculative stocks, but I am looking at small industrials that do have solid earnings, are going to start paying nice dividends, and have that 400-500% growth in them over the medium term. Some of them trade via appointment, so they're hard to really get in and get out of. It's a bit of a lobster pot. So, I find every few months I will grab the financial review and a highlighter and go through the entire market. But I just think that just like music will hopefully get back to guitars, bass and drums, I think financial markets and our way of living will get back to the way it should be. And that's this, it's Warren Buffett, old school style, investing for the long term, saving a lot of money, not spending more than you earn. But yeah, definitely, I think the stock pickers market is returning. And I think you're seeing a lot of craziness on the Australian resource stocks at the moment. And unfortunately, I think that's got a little bit to do with ego, but I might be wrong.
Oh, there's no ego in the market. I'm shocked that you'd even suggest it.
Well, Gina Reinhardt does a hell of a lot. You saw her, I don't know, people in the East probably wouldn't realise telethon. We've got this long-running telethon. I think it created another new high of 77 million donated. I just think it's like a stock market. Telethon donations are getting tired. Maybe we need to have a couple of down years just to reinvigorate. But Gina's just going nuts on the lithium sector. Stepped into a stock called Linetown around $3 and is now trying to block other takeovers. So is there a real concern over lithium and supply? Who knows? But I just wonder, like WTF, guys, what's going on? Because I know that it's not hard to lose money in this market, but her $3 investment not that long ago is now worth $1.60. But what would I know? I guess she's made a shit ton of money out of iron ore, but what's really going on in the lithium sector?
So what do you say then? You've got a portfolio of clients who must be, concerned about the way the markets are going at the moment.
Yeah.
I mean, what are your sort of messages in terms of, hang in there and, we got to see this through, or are you seeing signs of panic from some people thinking, I got to get out? What are you seeing?
Well, I think it's been so bad. We've had a grinding 2 years of just no appreciation for many, many stocks. And some of them, when you're in these times where you need to grow a company and the capital markets, the taps turned off, you need to raise money at huge discounts. And I've just had a couple of companies that have forced to go out on the market and raise at around 30% discounts. And that hurts. That's a slap in the face for loyalty. But these biotechs, one of them's extending the lives of people with brain cancer, and they're putting drugs into trials, but they need money, and you have to just do it at that discount. So I'm saying to my clients, look, here's the opportunity. You either take up more shares or you hold. Mining stocks outside of lithium and to an extent rare earths, copper stocks have just been absolutely poleaxed. And the Australian dollar gold price has just come off an all-time high. I think it's trading around $3,136 an ounce. We're going to actually start to see producers hedge, Martin. They'll start to lock in high gold prices. Hopefully they can deliver. But the gold juniors, it's funny how you can get a commodity so right, yet the equities have been in the dog box for years now. And I'll look at the steep discounts in some of these gold companies with ounces in the ground, and instead of $60 to $80 an ounce, some of them are trading at 10 to 20. And what I'm saying is we just need some more M&A in the gold and silver sector. And once things take off, there's no bubble like a gold bubble. there's been a bit of interest in uranium. Most Western mines, uranium producers need about $90 a pound to break even, $80 a pound to incentivise new production. I think the push to nuclear is, again, real. So uranium stocks have had a bit of sunshine. Lithium, as I mentioned, the takeover frenzy, the rush for lithium in the Pilbara. There was a most interesting 60 Minutes segment on rare earths. And I'd strongly suggest that those interested in the sector chase this up. I think I tweeted it, actually. And you've got to look at how the Chinese control the market. And they've stopped supplying the rare earth to Japan that helps them make night vision goggles. So it just goes to show you how much control China has over the rare earths market. And I thought Kim Beazley, whether or not you had a high opinion of him as a politician, he actually spoke really well. And I'm thinking, well, wait a sec, could we have another resurgence in rare earths? And it might be worth positioning. I know that my clients, where we had a bit of an accidental rare earths discovery, so we're sitting quite nicely at the moment. But I mean, these issues are real, and China controls it, and they can turn the tap off, and then suddenly the world's fucked in relation to having the supply of the rare earths needed, especially for military.
Well, that might also help to explain the recent discussions between Australia and the US with regard to the rare earths and the support from the US to help alternative sources, I suppose, which is part of the story, isn't it? But it's interesting. Jason actually asked this, which is sort of on the same line, which is to do with the rare earth metals. Is the industry trying to encourage creation of it? Is it a good option to invest in? Say, I want to say geranium, but it's germanium.
That's the one.
Yeah. Geranium's something rather different, a bit more flowery, given Chinese largest supplier of it. And it's making the point, isn't there, that there is actually a bit of a sort of a battle going on. And as you say, China has a lot of the control of a lot of it at the moment.
Yeah, I'm pretty sure that's the one that goes into the night vision goggles. And well, the crux of the story was that 30 years ago, Guy DeLuca made a discovery, and they've sat on that stockpile of rare earths for 30 years. And at the time, it was worthless. So now they're getting some government help to mine it. But the problem you've got with rare earths, just like lithium, is that you can get the commodity right, but you can buy the wrong company. So what has been happening in Australia is a lot of the juniors will just bring out drilling results, which look great, but they haven't done the metallurgy. And the metallurgy is actually key, because it's no good if you can't extract the stuff. So to be honest, I'm expecting that the government's pledged, a couple of $1 billion for this. Some of the state governments are quite generous with drilling grants. I am going to suggest one to look at. One of my longest term relationships in the junior market, longer than both my marriages combined, has been Red Metal, and they've made potentially a world first discovery near Mount Isa, 20 kilometres from Mount Isa. And I think Glencore are closing down their copper operations. So I think there's going to be an incentive there. But again, if you can't extract it from the rock, it's worthless. So there are lots of risks. But certainly it's a sector that could be reinvigorated, because the last crazy rare earths bubble was back in 2010, 2011, when Linus was trading at 20 cents. So look, I think it's a sector certainly to look at, but you have to look at the ultimate profitability, the production risks, and the rare earths mix as to what is required, such as magnets, or what goes into the military, or, as mentioned twice previously, night vision goggles.
Yeah, interesting, because got a follow-up from Jason there as well, which is, I'll just put on the screen, which is why would China supply resources that are required for military equipment which could be used against it? Not going to happen, in my opinion, especially in the current times, which is an interesting take on it.
Yeah, well, I think that just means simply Australia needs to get its shit together and fast. And what they're actually playing with the Japanese, I think, is obviously of concern. But again, go back and watch that. Go back and watch that segment, because it's certainly enlightening. But we have arguably the best reserves and the best mixes of rare earths on the planet. Yet we've been really slow to develop it because, as you know, these mines take a lot of time. And heaven help you if you've got a rare frog or a rare insect in that area and you have to go through all these heritage clearances. And then we've had that disaster with the WA heritage laws, which they had to repeal. So you look at all the lawyers' fees and piles of paper just to bloody mine something that is of critical importance. So sometimes you just got to put our national interests ahead of that of a rare frog.
Well, yeah, it's just interesting, isn't it, how some of the decision-making processes seem to get sort of caught in the traps. And I guess there's always a question about, do you always go on exploiting and trying to find more? But it comes to a broader question, Tony, and that is that it's a growth question, right? Our growth, the GDP growth in Australia and many other Western countries, are still very low. And with the higher interest rates and with the higher costs of capital that implies, it seems to me it's quite likely that we're going to see very anemic growth for a long period of time. And in fact, I don't see where the levers of growth are. And I'd also perhaps suggesting we're coming to the point where we're almost at the end of growth. There'll be a point at which it will be impossible to grow anymore because the resources won't allow it. Then the question is, well, if growth is much more limited and therefore the ability to be able to actually take tax off that and fund things means the structural deficit that we've got in Australia and many other countries have got too are going to get worse and worse. And it gets to the point of asking the question is whether we are actually in a sustainable environment at all, or whether in fact we're in the situation where the tax rates will have to continue to go up. The OECD quite recently suggested that we should be putting GST on a much wider range of goods and services, including education. The tax drift is already there, although of course there is the third stage tax cuts that are still out, I think next year. Looks to me as though the budget's pretty much messed up.
Yeah, I think honestly, let's just hit Control Alt Delete on Western society. I think that would solve everything. Or just switch your computer off and on and hopefully the problem's fixed. But you're absolutely right, because now we have an aging population. A lot of infrastructure is going to start to decay, like parts of Japan and Tokyo. We don't have the youth to drive it. You look at a country like Brazil. I mean, that's been a bigger gunner than Axl Rose. I remember reading, I think on a train in 1994, how Brazil's going to be the economic powerhouse. You look at India. India certainly has a lot of growth ahead of it, but you look at their superstitions, you look at their love of cricket and Brett Lee and Bollywood, but you've got to start somewhere. Firstly, give 700 million Indians a toilet, for starters. I still see, India's probably a chance. I actually emceed a gold conference in Sydney, and one of the international commentators mentioned that the growth engines of the world are going to be Indonesia, which is another bigger gunner than Navarone, and Vietnam. So let's wait and see, because certainly not going to be from here, even though we've got immigration. You look at the US, you look at how they maintain themselves as well, and with their astronomical interest rates. So yeah, the big three or the big tips are certainly Vietnam and Indonesia. But I guess Indonesia's got the youthful population, the same as Vietnam. Can they offer incentives for foreign companies to move there, just like the Irish did prior to the Celtic tiger turning to shit? So spot on, Martin. Spot on in that regard, based on the fact that the costs of construction all escalated. And interestingly, Toyota have come out and cast doubts on the EV revolution. Yep. And they're going to still invest heavily in ICE vehicles. And I find that staggering. You look at the share price of Tesla, he's going to have to start cutting costs. And there was an article here in Perth on John Hughes, which is our most famous car dealer. And he's saying he's not going to touch used Teslas because of the replacement battery costs, and consumers aren't factoring that in. And there's certainly not going to be enough copper discoveries or supplies of critical minerals to fuel this EV dream. So there you go. And, a lot of the copper is at 4,000 metres above sea level, under 1%, and new discoveries take years. So I think a lot of the shit we're being sold is a fugazi.
Right, yeah. And I always think election cycles, election cycles are the be-all and end-all of what happens and what people talk about. And quite often, there are issues which should be being explored which probably aren't, because they're more complex and more difficult. And I guess a lot of people in the political machine hope that people aren't actually taking too much time to take too much notice of what they're actually doing. But the bottom line is that actually there are some really, really big questions here. And I have to say that my own view of what the Treasury has been doing relatively recently, which is to jawbone the RBA into not lifting rates, despite the fact that we said earlier on, there are a lot of indicators that suggest that they probably should lift rates again. I don't know what your perspective is, but my view is they should definitely be higher than they are. The inflation is still getting away from us. But it's almost like there are things that the government doesn't want to talk about, and there are things that they want to try and misdirect on and look over here. I'd also argue, by the way, just in passing, I think the whole voice thing was a bit of look over there rather than over here, we'll keep you distracted from some of these other things. But, there are some really, really big and important issues. And I guess the other side of it, as I sort of think about this, and I come back to individual households and businesses, in my surveys, I'm seeing more and more businesses failing, in the construction sector and elsewhere. I'm seeing more households running out of runway in terms of actually their cash flows. And whilst there's some lip service to that, I don't think that a lot of the conversation is really serious in terms of trying to actually, get a grip of some of those issues. It's almost like, oh yeah, it's happening, but it's not really that serious. And there's a real disconnect, and I don't know whether it's just my age, but it seems to me that the disconnect has got worse. The number of dissonant things going on around the world has got worse, and it's like we're still trying to do the same thing again and again and expect a different outcome. Well, maybe it's time to say, well, hang on a moment, this sort of neoliberal philosophical view that's driven markets to where they are, and it hasn't worked. It hasn't worked for ordinary people. It's worked for the few. If you look at the wealth distribution, they've done really well. The few percent. But for ordinary businesses and ordinary households, it's actually not worked at all for them, and yet it's still being perpetuated. So I get to the point of thinking, maybe it's me. Maybe I'm too old. But no, I think there's something more significant than that going on.
Oh, absolutely. And there's one word that spells trouble in my household, and that's when I hear sweetheart. I know I'm in the shit. But these two words, the new RBA governor has, which I think are frightening, is low tolerance. So she's going to keep on banging on about low tolerance, and to me, she's got some courage. This one. I don't think she's going to take any shit from anyone. She speaks with authority. She speaks direct. And if she has to lift rates on Melbourne Cup Day, then December, so be it. But all the figures suggest that maybe she should in November. We're a slight chance in December. And thankfully, the RBA doesn't meet in January. But they are looking at coming up with less meetings, I believe, as well, which I don't know how that's going to work.
Well, that was, of course, a recommendation from the review of the RBA, which, they basically said we'll just meet less frequency and we'll follow the the pattern of other central banks around the world. But it doesn't. I mean, it really didn't make much in terms of change of trajectory. Almost nothing. Although interestingly, of course, Chalmers hasn't appointed a deputy governor at the moment, so that she's one down. Right, and it's interesting that the Treasury guy who sits on the RBA board pretty much all but said that he would be voting against a further rate rise, and Chalmers basically said, well, the inflation is still very much within what we expected it to be, so there shouldn't be any moves. I mean, it's like they're applying all of the sort of the pressure points. But I agree with you. If she is not going to be independent and take a stand and say, no, we've got to do this, then why is the RBA there at all? Well,
finally, maybe someone who recognises that the bond market exists, that you can't come up with bullshit when they say it's plausible that rates won't rise till 2024. He said plausible. He didn't make any promises. And anyone that banked on that statement, I mean, you're not going to launch a class action against him. But still, we're in this situation where interest rate increases have reverted back to fundamentals. And at some point, eastern states' property markets are going to revert back to fundamentals. And in some cases, they're going to overshoot to the downside. And I've had my 2 years of pain in my position in solid small cap companies that have struggled due to a lack of interest and money going elsewhere. Now, you look at a 2-year negative market on property, and that's going to be Armageddon. And I go back to the election miracle with Morrison. 2019? I was arguably on track to win that bet with the kook, and things were going along. We were having a nice, normal, needed correction, and then suddenly COVID hit. And I can tell you, health-wise and financially, that's going to be the worst thing to happen to this generation, because let's face it, the world's gone batshit crazy on cheap money. We've had lots of scams, frauds. You look at all these new people, new rock stars who have just walked away with billions of dollars. And as I said, control, alt, delete the Western world. And even the non-Western countries are getting caught up in the speculation and what's going on. And we're now just drowning in dopamine. So again, you can't have a soft landing from here. It's just absolutely impossible without a world of pain. And I think one of the major false beliefs in society is that the government are going to bail us out. Well, guess what? Look what, not to say the government, look at what the RBA has done from 0.1 to 4.1 with the threat of 4.6 in 18 months. So no one's going to bail us out. If you go out and take the risks and speculate and borrow a shit ton of money at interest rates under 2% with the belief interest rates will never rise, and you're a speculator, you deserve to get taught a lesson like I get taught regular lessons on the stock market. So it's, property speculation is no different to speculation on the stock market. And you are going to see some nasty stuff where people aren't going to want certain properties. They're not going to want land. They're not going to want development sites. And some of them in some areas are going to drop that 60, 70% where they can't, there's no buyers. So that's speculation.
Yeah, and just on the property thing, 3 points. Of course, we've got very high migration. 560,000, I think, was the last number I saw over the last 12 months. And as you said, there are those are student migrants and other categories, but some of them are buying property. The consumer confidence is still in the gutter. This is slightly out of date, but it's pretty close to the truth. But for me, it's this one that really actually is the killer slide. This is the average full-time earnings compared with the average dwelling price. And you can see basically that since 1970, we've seen full-time earnings double, and we've seen real dwelling prices 4 times. 4 times. So, the gap between what people are earning and the price of property they're aspiring to buy shows you that we are in an absolute mega bubble. And I don't know, but many people just say, no, this is all fine. I don't think this is fine. I think this shows you that reversion to mean suggests that there is still significant downside potentially ahead.
Yeah, and price to income, like PE ratio, is certainly it's a very basic measure. It doesn't take into account a lot of factors, but when you're trading at 13.3 in Sydney, still high numbers. And then we've got the Perth market, which was six times, and now that's growing because we've got eastern state investors now buying up houses in Perth without even looking at them. Is 6 to 7 times going to be the new norm? It's still relatively expensive when you look at the long-term trends. So I think it's got a long way to unwind. I think you're going to have a lot of forced sales. I think, honestly, I know it's taken a lot longer because we did have interest rates at 0.1, 2-year fixed under 2, but I still think we're a chance of doing what Ireland did. And that's going to be ugly, and it's going to take years to recover. And then you'll start getting back to long-term growth trends, which are, in real house prices, are 1% to 2%. Not like I looked at my parents' old house we built in French's Forest, where that growth since then has come in at 6% on an annualized basis to get where we are now. But that growth's come in a lot in the last few years. So, real house prices don't grow by that much. And once interest rates continue to normalise, which sadly they are, there's going to be more pressure. And we've still got families, as I mentioned earlier, Martin, hanging on. Our buffers are being certainly worn down. They're going to be scrounging for cash. Finding $2 coins in the lounge, or it's going to be a win in some cases. And I know that I've certainly cut down on my spending. Obviously, my income is linked to activity on the stock market, and it's taken a hit. So you've got to do what you have to do to survive. You cut down your spending. I believed years ago that credit cards were evil, so I got rid of it many years ago, took the pain of a personal loan to get through it. But I certainly have lived well beyond my means, and I can assure you it doesn't make you any happier. Like, I actually find a lot of enjoyment out of finding reasonable value Scotch fillet and ribeye steak, and I'm always on the hunt for barramundi at a good price. Actually, that sparks more joy than buying my partner a handbag.
Well, you certainly can't eat the handbag.
No.
It's interesting because Cookie Boy, I'll just put it up on the screen. Cookie Boy said, could we see an emigration problem like in Ireland during the early stages of the GFC? The Polish left in droves. I guess the point is it depends on what's happening in other parts of the world. Yeah. Because one of the things I think people probably should understand is that Australia is perceived by many as still an attractive place to come. And, that may change if we go into a recession in Australia, and with, property where it is and everything else, there are a lot of downsides. But relatively speaking, so many would say, I think that Australia is still a more attractive place than many other places around the world. Now, if that were to change, then certainly you've got a very migrant population that could drift away, and if migration took people away, the demand would probably fall, and that would actually put more downward price pressure. And look, there are reasons why the government wanted high migration, and it's to do with just pure GDP. If you bring more people in, they spend more, they pay more tax, and that means that your top line GDP number goes up so that you can avoid a technical recession. That's why it's being done. The real measure of GDP per capita, and of course we've been going backwards there for some long time, but that's not the one that the economists choose to focus on, nor indeed the government choose to focus on. I think it's one they should, actually. But it shows you that it depends a little bit on the lens that you use as to why you do what they do. But to my mind, this stupid amount of migration was never flagged pre the last election. In fact, Albo was more on the downside rather than the upside of migration, but then turned turtle soon after. And so we've actually got a migration boom that is forcing all sorts of things off the scale that was never actually voted for.
Well, I think in relation to your question, where the hell are these people going to go? They tend to come over here and work their asses off. They'll work at night. They'll work multiple jobs. And if they work hard enough, they can actually live here reasonably comfortably compared to the country they came from. And I'm thinking, well, where the hell are they going to go? Are they going to go to another, Tasmania? Are they going to go to New Zealand? Are they going to go to the potential growth powerhouses that are Vietnam and Indonesia? Where the hell are they going to go? UK's up this shit. US, ditto. Where else do they go? I don't know. My Juliana was reading some magazine. She said, apparently Portugal's a cheap, nice place to retire. Well, that window will close. Where do they go? I mean, let's face it, Australia is one of the most beautiful countries on earth. It's relatively safe. We've got a high standard of living, everything going for it, healthcare, food, you can do what you want here. And people are going to find that extremely attractive. But we've just got a massive housing crisis at the moment. And, these people that come in are prepared to share rooms. A lot of Australian kids refuse to share a room. They'll give you some bullshit that they don't want to see their sister get changed. And then they demand a backyard off the parents where they never go outside. So I just think that Australians have this sense of entitlement, whereas the people coming in are going to, on the whole, work their asses off and take away the jobs that some of our kids should be doing because they don't want to work. They just want to scroll on their phones and get a handout from mum and dad. So I think you've got to look at the discipline and work ethic of the people coming in. And I can understand why the Polish bailed out of Ireland. But now I've read commentary where they're saying that Poland's actually got it right.
Mm. Yeah, it is interesting. I actually did some work in Poland years ago, and it was very interesting watching the entrepreneurial side come back after the sort of the Eastern Bloc influence, and it was quite interesting just watching that evolve and develop. So it's quite fascinating. Jason made an interesting comment, which I'll just put up again. We have 4-year terms of government. They only think short term. We need longer term thinking, but it seems all about election cycles, sadly. And I think that's right. I mean, to my mind, the political thing has overtaken pretty much everything else. There's no strategy. There's no strategic thinking about what sort of place do we want to be. What are the sort of the norms that we aspire to have. It's all about ticking the box on the numbers and ticking the box on the next election cycle. And by the way, I think Albo is probably individually looking at the latest surveys. Any real support that there was for a lot of the stuff he's been doing is evaporating. I should also, just before you come in, let me just say, somebody asked why I was featuring particular comments. If you put out Walk the World in your comment, if you want your comment to be actually headlined, they come through to a separate queue, and therefore I can see them more readily. There are so many conversations going on in the chat tonight, with more than 650 people in the room, which is great to have so many on, and thanks very much for staying with us. It's very hard to see all the other comments, but so if you've got a particular question or a particular comment you'd like me to see, make sure you use @WhatTheWorld. That'll make sure I see it. Sorry, Tony, go ahead.
Oh, no. I actually, there was 5 words I regret saying in my office. I said, the market's quiet, right? And I said, I actually like Peter Dutton. And I regret saying that. Whenever I used to, throw a grenade into the office, it was Lloyd Rainey is totally innocent or guilty, discussed. Then I'd leave the office. But yeah, I think the guy makes sense. I don't care what anyone says. I like the guy. Maybe I'm crazy. And I think Liberal are going to have a chance. You look at what Albo wasted on The Voice. And especially over here in WA, Roger Cook, nowhere near as popular as McGowan, and Liberals a massive chance as well. But again, we have to wait for those cycles. But are they the best of bad choices when anyone that comes out and actually tells the truth about a lot of things is going to get assassinated? Let's face it, you have to be a bloody good poker player or a good bullshit artist to be a politician, and I certainly couldn't.
Well, it's interesting because I mentioned I spoke to Gerard Rennick earlier on today, and of course he didn't get nominated for his senator position, so he'll be out, I think, next year. And I chatted with him specifically about this issue. How come, unless you toe the party line, you almost, by definition, can't participate in the political process, and that suggests that is democracy at risk. And he said, well, the point is the only way to make sure that you actually get the right outcome is to participate in the political process. And he did say that there's a lot of people who stand on the sidelines and throw rocks and make YouTube videos, but don't actually participate in the political process. So his view was, the trouble is, if you're not careful, you end up with what you get, because by definition everybody else is looking the other way. I think there's a lot of truth in that. So in a way, we are almost responsible as a community for what we've got, because of the fact that we didn't actually participate actively in the political processes to make sure that our views and opinions were actually being articulated. And because, like I said, who asked us about massively high migration? I mean, that was never on the cards. And if it had been, maybe people would have had a different view. So I think there's a really important lesson here about the nature of politics and the nature of society and how these two things work.
Look at YouTube sometimes, and I think Isaac Butterfield would make an excellent politician. And if you don't know him, go and look him up. So he's a comedian, but he's straight up, honest, admittedly a bit foul in certain areas. But there are people out there that can see through all the bullshit. As I said, I'm not a conspiracy theorist by any measure. Life's far too short to go into all that shit and write letters to the editor. But again, you've got to look at who makes sense. And for my understanding, Dutton makes sense at the moment. So is it going to change my life if Albo gets kicked out? I don't know. Am I looking forward to those tax cuts if they eventuate? Yes. But look at this side issue, Martin. I don't know how many people have thought of this, but 2 million Aussies haven't lodged their tax return yet. And if you don't have a tax agent, that deadline is today. And because the government has axed the offset. So instead of a return, we've got all these people now worried that they're going to owe the tax office. So that's another issue as to why spending might come off and why there's a fear of lodging when you're not likely to get a return as in previous years. So I thought that was interesting that 2 million haven't lodged. Wow. And the tax office will fine you. I can assure you of that because I've copped them over the years. Don't worry about that.
Yeah, absolutely. No, that's a very, very important point. Okay, we're coming towards the end of the show. There are two other quick issues. The first issue, I just want to come back to gold, right? Because gold's now knocking, this is the US gold price, knocking on 2,000. And it's interesting because there have been a number of people who've said over the years, no, gold should be valued at 5,000, rather than 2,000. And it sort of wobbles around but hasn't gone anywhere. Is there a change in the weather with higher interest rates for gold? Because the question I've got is, if in fact you can get better returns, 5% plus returns from things like treasury yields, surely gold intrinsically should be worth less.
Oh, absolutely. And I think in this interest rate environment, it's certainly outperformed. But you'll hear the salespeople say that, look, gold is to protect your purchasing power, which it has done brilliantly, and silver. So certainly has outperformed. And once interest rates eventually peak, God knows where, and they start to come off, that's when you could see gold really motor. And what I think will drive gold, Martin, is simply the participation rate and FOMO with fund managers who need to make their mortgage payments on their Mossman house and their BMW. And I think the gold participation rate is very low. Portfolios are very low in precious metals. And I think that could really drive the sector and drive the prices of gold explorers and producers. So we're kind of on the cusp. But as I mentioned at the start, I've got the commodity right, but the gold stocks a lot of the mids and juniors are in the toilet and beaten up. So I think that the outlook for gold actually looks favourable. But again, most central banks and investors look at it as a way to protect your purchasing power. And with the AUD gold price at 3,136, gold companies are going to start spitting cash. They'll start to lock in production at higher rates to assure income, and they'll start increasing their dividend yields. And some of them might even start paying yields not quite as high as the banks, but to rival the banks. And that's when you'll see an influx of money, because there's been no greater wealth destruction than in the hunt for yield.
Absolutely. No, wealth destruction is exactly the right way to think about it. And then the other question, which in fact Smooth put up a little while ago, we've got the Fed. They're going to do something tomorrow. We've got the RBA next week. My take on it is I think the Fed will probably do a hawkish pause. I don't think they will move. I think the RBA is probably set for a 25, but it's not completely certain because of this political influence. But I suspect that they probably will, because I suspect that in Australia our rates are still too low relative to some of the other markets. And another 25 basis point hike is not going to add hugely to the burden, but it sends a very important signal about the independence of the RBA. So that's my call. What about you, Tony?
Well, it sends the message, stop spending money. It was like Jim Carrey, I think, in Liar Liar. He said, stop breaking the law, arsehole. I think we've just got to stop this debt-fueled consumerism binge. Stop spending the money. Pull your heads in. Otherwise, we're going to jack up rates. I actually read an interesting article today on Livewire where they're saying that real mortgages, what Australians are paying in Australia, are 50% higher globally than the likes of the US, UK, and other countries. 50% higher relative to our income position. So we're arguably the highest mortgaged country on the planet. And it's just going to hit the fan. Absolutely going to hit the fan. And, part of me is looking forward to Melbourne Cup Day, because it's the first year since the age of 18 that I haven't had a bet and I haven't had a bloody drink. So I'll be watching the interest rate decision more than the festivities and the and the ladies that spend far too much money to try and look good and look like everyone else.
Yeah, all those hats. Quick question from Joshua just came in. Is RAD still a buy?
Well, they've come out. Look, good question. I'm happy to answer it quite openly. They have come out with a capital raising today. It's about a 30% discount. It's unfortunately they need $10 million. They've had to offer. The broker at the moment can dictate the terms. It's at 7 cents. They've got 4 clinical trials coming up. They're looking at imaging in pancreatic cancer. They've got prostate cancer drugs coming through. In non-independent research reports suggest the valuation is multiples of where they are now. And I will be recommending that my clients take up the 7 cent rights issue. So the answer to that question is yes, I believe it's still a buy with the usual disclaimers. The announcement today, yes, it was a bit of a bitch slap, to be honest, but these are the types of markets where if you need money, you're going to have to give incentives to get it. And I think that eventually, if the fundamentals stack up, which they are looking good, we will overcome this dilution. So basically, yes, and a good question, Martin, and I hope I'm right.
Great. Well, thank you for that. Well, Tony, we've pretty much come to the end of our time. I want to say thank you very much indeed for sharing your thoughts, and to explain to everybody, we just did a freeform one tonight for all sorts of reasons, but I think it went pretty well, and hopefully we answered some of your questions and shared a few thoughts and opinions. A lot of uncertainty ahead, and of course my thoughts are with those in conflict areas around the world, wherever they are, and also in Australia, particularly those who are under significant duress, particularly from financial pressures. I always say in these sorts of shows, if you are in financial difficulty, reach out, and if you go to the National Debt Helpline on 1-800-007-007, that is a reliable source of help. Don't rely on some of the other internet alternatives that are there. And if you actually do speak to the bank about restructuring your financing, make sure that you're doing the right thing for you, not for them, because unfortunately sometimes I think some of those solutions are actually more for their benefit than yours. And I think we both agree, Tony, that this is going to be the start of something which is not going to be pleasant for quite some time. So you can't just put your head in the sand and assume that things are going to be magically, click of the fingers, and in 3 months it'll be good again. So you've got to lay the foundation for a bit of a grind. And, as we said, the storm is coming. And I think the interest rate storm is probably going to peak higher than it currently is and stay with us for longer.
Yeah. And no, absolutely right. And I think the first thing a lot of viewers can do, or those in distress, just have a total gift ban for Christmas. Just say, look, times are tough. Let's cut back. Let's not buy 8 different types of meats and seafood. Let's not eat leftovers for weeks. Let's just have a quieter Christmas and don't spend as much money. And that's the start of having an honest conversation. And anyone looking to get fit pretty much have to take your whole wardrobe to charity. Do some research on the carnivore diet, and my cholesterol is fine, guys. I will survive. They're my final words. I will survive.
Well, Tony, thank you very much. I'm glad you are surviving. You certainly look picture of health, which is absolutely great. And I'll make sure I get an up-to-date picture from you for the next show, whenever it is, so that we have a thumbnail that meets the current rather than the previous.
Yeah, well, I'm actually below my target weight, and Juliana said, can you stop losing weight? And I thought, well, what am I going to do? But anyway, I hope viewers got a lot out of tonight. I certainly had a lot of fun, and Melbourne Cup Day, brace yourselves.
Thank you very much, Tony. Have a wonderful evening. Thank you very much. I'm going to take you offline now. I'm just going to close the show. See you later. So there you are, folks. Hope you enjoyed that. Tony's always great value and makes some really, really important points, as well as a bit of humour too. We'll have him back on, of course, down the track. Next week, just to say that Damien Classen is on, and we'll be talking about the issues to do with the markets from his perspective. So that'll be next week. And the following week, it'll be me talking about the latest from our financial stress and modelling, which I'll be running over the next day or two. So that'll be up in a couple of weeks. So look forward to that. And thank you very much for spending your Tuesday evening with us. Hope you enjoyed it. And like and subscribe, please. And check out my other shows. And I'll be back next week, of course, with another one. So as we go, dog is still there. They haven't moved. Amazing. Peace, perfect peace. That's a very good way to end the show, isn't it? This is Martin North from Digital Finance Analytics, signing off. We'll see you next time. Take care.